So by now you've probably heard about the Israel and Iran war, and this video is going to help you understand how this could affect investments. So one issue that this could lead to is market volatility and risk aversion. So war will increase geopolitical uncertainty, obviously. So this could lead to people shifting more towards gold, US Treasury bonds, the US dollar, instead of things that are a little more risky like stocks. So this could lead to the volatility index going up, which as you can see is already spiking since the news of the war. In case you're wondering what this means, a spike in the VIX basically means that investors are a little more fearful and there's uncertainty, and this could negatively affect markets. Another issue that this causes is an increase in oil prices because of Iran being a major oil producer and bordering the Strait of Hormuz. So this is around 20% of the global oil supply. So with this, as you can see, oil prices have already risen around 4% since the conflict has escalated. However, this could be bullish, at least in the short term, for oil and energy stocks like ConocoPhillips, which as you can see is up about half a percentage point today. And they're also up 4% in the past week. Now another problem with this is there could be more inflation. Higher oil prices could obviously hurt the economy even more. We've already been dealing with high inflation. So this could lead to services, it could stall or reverse progress on U.S. inflation control, and the Federal Reserve might have to make some hard decisions. But there is one scenario where the Fed could actually cut rates sooner. So right here, as noted by Yahoo Finance, the economy has slowed and is vulnerable to anything else going wrong, including a sudden and persistent increase in oil prices, which it seems like we're already starting to see early indicators of. If the Fed views the hit to the economy and the labor market as greater than the temporary boost to inflation, the central bank could signal that it's open to cutting interest rates sooner. Now, some other types of stocks that are kind of obvious but are still worth noting. Defense stocks could see a boost right now. If you're looking for something that you might want to get maybe a short-term boost, it's hard to say if this will last a long time or not, or who all will get involved in this war. But Lockheed Martin, for instance, is one of the standards for defense stocks out there. They're up 2.62% today, up 3.13% in the past 5 days. They will probably keep going up as this escalation keeps getting worse. Now, also, another thing that could happen is gold prices could end up increasing. They were already increasing throughout this year. They're up 27.63% this year. And this could add more fuel to gold prices because people will be probably looking for something that they think is safer, things that are not as volatile as something like stocks, which for any bad news can take a pretty big dip in one day. But with gold, people seem to think that that's safer. So in times of uncertainty, in times of volatility, a lot of times historically gold tends to be bought more. Now we do have a few historic examples of what could possibly happen. For instance, during the 1979 Iran hostage crisis, basically this lasted from 1979 to 1981. There was an impact on oil prices and supply. So they had a strike in Iran's oil fields, which began in 1978, which led to a decline in global crude oil production. So that ended up raising oil prices. Investor sentiment and market volatility were worse. So this led to eroding investor confidence and a downturn in the stock market. As you can see here, the situation drove public anger against U.S. oil companies due to surging gas prices and long lines at the pumps. That also led to government actions and sanctions against Iran and long-term market effects, which obviously were not good. They had a macroeconomic environment of stagflation, high inflation, and low economic growth. We also had the Gulf War from 1990 to 1991, which initially caused a stock drop, followed by recovery after U.S. military success. So it probably wasn't quite as bad as some other conflicts, but the initial reaction was a sharp decline. The S&P 500 fell nearly 5% at a rapid pace. Sector-specific impacts, we had oil and gold that saw a quick rise. Automotive and other companies whose businesses were tied to fuel costs experienced declines. You had growth in high tech that was negatively impacted. Banking stocks were hit hard, and defense stocks rose on speculation that the crisis would lead to increased defense spending, which is common, of course, for a lot of these conflicts. The market rebounded after the announcement of the Desert Storm operation by the U.S. and its allies, and then they had strong gains in the S&P 500, gaining 3.7% the day after the operation launched. So just to wrap up, it's definitely worth noting that you might want to keep an eye on energy stocks like ConocoPhillips and similar ones such as Exxon, Chevron, Phillips, as you can see, all up around 4% or more just today alone, as well as defense stocks like Lockheed Martin. You might also look into others like Northrop Grumman Corp and a few others in relation to defense stocks, which again are seeing quite a bit of a surge right now because of this conflict. And then of course gold prices, which have already been going up this year because of all the volatility with what's going on with potential tariffs. We don't know which deals are going to for sure be done and which ones will not. We only have a few weeks away from that July deadline that President Trump gave the world. Basically, we have a few different conflicts, of course, going on around the world, and some of them have been going on a while. Some of them are escalating. So gold typically does better during times of high volatility as well, so that might be another thing to keep an eye on. Of course, as usual, none of this is financial advice. Make sure you do your own research.